Global demand for natural gas is projected to grow, driven by industrial usage and strong demand from Asian markets like China and India. However, supply disruptions, including geopolitical instability, example Ukraine conflict, and underperformance of LNG production are creating price volatility. Key prices are expected to stay elevated but below the extreme peaks of 2022. BOIL, leveraged long ETF, benefits from short-term spikes in gas prices, while KOLD, leveraged inverse ETF, offers exposure to declining prices. Both are highly volatile and cater for short-term traders. UNG, natural gas ETF, reflects spot price movements and provides long-term exposure. Outlooks depend on winter weather, geopolitical risks, and Asian LNG demand. AI and cloud computing are increasing electricity demand, indirectly driving natural gas consumption in regions reliant on gas-fired power plants. While direct quantification is limited, data centers predicted to consume 3% of global power by 2030 are expected to contribute significantly to gas demand in developed regions. G'day folks, welcome back to another update on natural gas. Before we go any further, make sure you hit the like and subscribe button to support the channel. Also, for some added benefits, visit the Patreon page where each month, for the cost of a cup of coffee, we scan bullish moving shares across global regions. Also, to learn how to draw the indicator shown in this video, follow the links in the description below. Okay, so first looking at the natural gas trends on the monthly, weekly and daily. So here on the monthly, you can see there we're still above the moving averages of the CCI, the Commodity Channel Index, and the price is also broken above those respective moving averages. So bullish, slightly bullish movement at the moment on the monthly. On the weekly, has been bullish now since September this year, and still above those moving averages of the CCI, and also above the moving averages of the price chart, and again bullish movement on the weekly. However, on the daily, it did actually hit this, let me just pull that up, hit that key resistance up there at 36.34, and it's been declining ever since. You can see there the CCI actually broke down below that those moving averages, giving us a bearish signal. And again, there's no sign of a pullback yet approaching those moving averages on the daily. Likewise, the price is broken below those moving averages on the price chart. Now, if we go to the intraday chart, we all only trade in the direction of the higher time frame. So if you're trading on the hourly, I've got the hourly here as an example, but you can swap this with a 2-hour, 15-minute, whatever time frame you look at on the intraday. So you always go in the direction of the higher time frame. So on the daily, we take short trades only. So you would have taken short entries, going back to that point there, which coincides with the daily breaking below. So you would have taken a short entry there when the CCI breaks below the moving average and also the price. Don't go short or long when that is in the middle, in that neutral range. I call that a neutral range. So you would have gone short there, and I prefer to exit once that CCI breaks into that moving average range down there. Now you'll notice that comes right near the bottom of that bounce almost on that candle there. You would have got out near the bottom right there. And you'll notice also if you waited till that the price hits that moving average range, you would have lost a few points. Not a lot, but you would have lost quite a few just in the bigger scheme of things. Now avoid going long during this period because the daily is going short, only take short trades. And again, you would have taken a short entry at that on that candle there, even though it gapped down, and you would have got out near the bottom of one of those little spaces down there if you're following this on the 1 hour time frame. Now what I did have here on our last update, I had a bullish divergence. You can see that trend line, higher lows on the CCI versus lower lows on the price. That was our last update. Now since then, the price actually dropped slightly, and so did the CCI. So I'll take that to that level. And you can see there, that was still pretty much a double bottom on the CCI. Now you could argue that was invalidated or it actually hit its target. So if we drew a Fibonacci from that low to that significant high, you can see there it just touched that wick, just touched that 23% to the 38% level. Now, one thing I want to emphasize, that is I don't trade these divergence. Sometimes they break a lot higher. Sometimes they just touch it like it did there and bounce further to the downside. So again, avoid trading these and going, in other words, avoid going long in this case, because A, you're going against the larger trend, and B, these don't often grow or extend much further than the 23-38% level. In this case, it just kissed it and then it bounced further to the downside. So you would have avoided going long at that point, and you would have taken another short trade on that candle there when the price broke below and when the CCI broke below. And you would have exited on that candle there when the CCI broke and touched that moving average range. Again, another good trade near the bottom of that range. Next, looking at BOIL, That's bearish on the monthly, no CCI for it. It's well below its moving average range on the monthly. On the weekly, we do have a bullish divergence here, higher lows on the CCI, a nice big bounce, although notice the price is still dropping. So again, we're going to consider that a bullish divergence as long as that keeps rising. We're going to consider that a bullish divergence. Hasn't moved yet, so don't go long yet. We want to see a significant break above to be more bullish on it. On the daily, however, we did have a few bullish divergence here. It's a bit hard to read those in there, but let me just expand that to see if I can make it a bit obvious. There's a few more bullish divergence in that little range there, higher lows, and they match against the price chart. You can see lower lows on the price, and the more recent one was there between those peaks there, higher lows on the CCI versus lower lows on the price. And in this case, it bounced, hit our 38% target, broke right through it, and went just above the 61%. Then it started breaking to the downside. So again, you would have avoided going long on that one there. The way I use these divergence, I like to use them as a potential exit point. So if you're going short, just be very careful and keep a close eye on it, knowing that we've got a bullish divergence, so that way you get out with the maximum gain with a, getting out. And again, I prefer to close out the positions when they touch the moving average range of the CCI. So again, I don't trade these. Now going to the intraday chart again on the 1 hour, again taking short entries only. You would have gone short back here on that point there. So that would have been just before our last video on that candle there. You would have gone short. And at the moment, it's still in a trade. It looks like it may close out very shortly, probably in the next hour or two when a trade opens. So you would have got in on that candle there, and you would have gained that little bit, and you would get out probably on the next 1 or 2 hours of trade. So for KOLD, that's broken above its moving average of the price chart. Bullish move. There's no CCI for the monthly. On the weekly, it's actually just in a neutral range, but about to break through that moving average range, giving us a bullish signal. Likewise, the price. Now, also, if I zoom out, you'll notice here we had a bullish divergence back in late 21. Very long-term bullish divergence versus lower lows on the price. So that's similar pattern to the BOIL chart. And now this is actually finally broken to the upside, giving us a nice big bullish move. And you would have got in probably around that area when it broke above the moving averages of the price chart. Now, that would have been a false break, so you would have gotten out with some stop losses or average down possibly, depending on your trading strategy. But in this case, you would have gone long there and closed it out probably at one of those points there when it touched the moving average range. You can see there by the color coding on the CCI I've got, you probably would have got out on that candle there and then re-enter it again at that point. Now, that's on the weekly. On the daily, again, a fresh breakout to the upside on the daily, so taking long trades on the intraday. But you'll notice it's been sort of fluctuating in this range between the minor support at 61.65 and a resistance at 78.30, a minor resistance before hitting that major resistance at 85.10 up there. But at the moment, on the daily, it's a fresh breakout to the upside, so bullish movement only. Go to the 1 hour chart on the intraday, again, long trades only, and you would have gone long somewhere around one of those candles there when it breaks above on the daily, but also on the hourly when it breaks above the CCI and also the price chart. And at the moment, similar to BOIL, you'd still be in a trade and wait for that CCI to break into that moving average range to close your trade. And lastly, look at UNG. Now this one's still on the monthly, still in a very narrow moving average, which is a neutral signal, although the price is showing bearish movement at the moment below its moving average, but the CCI is threatening to break above that moving average range, giving us a slight bullish signal. On the weekly, we've got a bullish divergence here, higher lows on the price on the CCI versus lower lows on the price. Now you'll notice the CCI is still rising, but the price is still dropping. So just hold your horses. Don't get into the long trades yet. I'd like to see that break a lot higher on the price chart. On the daily, we do have this fresh breakout to the downside below the CCI moving averages. Likewise, the price is broken down and threatening to come and test this support at 12.96, but also 12.57. If it breaks below that, we're going to see a lot more bearish movement on UNG. Now going to the intraday chart, again taking short trades only based on the daily, you would have got in. Let's have a look at that. That would have been probably at the when it broke below the CCI there on that candle, and similar to the other ETFs, you'd be still in a trade and probably closing it out in the next 1 or 2 hours of trade once the market opens. Hopefully it doesn't gap up if you're going short, and it just inches up slightly, and you can get out with a nice little profit on that one as well. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.